What's up, everyone? It's Jack back with another video, and in today's video we are going to be talking about Salesforce, ticker symbol CRM, and whether or not it is a good buying opportunity. This is a stock that's down nearly 30% from its all-time highs, and it's been previously, very bullish. The stock was actually just up like 6 or 7% in pre-market because at their Investor Day presentation they were extremely bullish on the company, and if you don't know already, the market's forward thinking, and they pretty much came out giving some guidance for fiscal year 30, right? So that's like way into the future, and it was very optimistic. And so because of that, the stock was up. And so with that being said, we're going to cover obviously all the fundamentals. I will cover some of the key summary details of the Investor Day presentation. And then obviously we'll jump into the technicals. We'll go over some trade ideas and overall decide whether or not CRM is a good buying opportunity. Now, as always, this is just for entertainment purposes only. Please do not make trades solely based off of, my videos, and obviously do your own due diligence. The purpose of these videos are just to bring as much information to you as possible. I do all the digging, you watch the video, and then you make your own decision whether or not you feel it is a good investment or not, because obviously I'm not always going to be right. So with that being said, let's jump right into it. And obviously I do respect your time, so there will be timestamps down below, so you skip to the point that you find the most value in. For those of you who don't even know what Salesforce is, maybe you have just started to do your due diligence on this company, it is a massive infrastructure, customer relationship management software, okay? It's a CRM. Hence the ticker symbol, right? So a CRM, again, is a customer relationship management. It helps you manage your customers. I mean, it says it in the title, right? And so you can do marketing campaigns from a CRM. You can obviously have a database of customers. You can, target those customers. You can, a lot of these websites where you're buying things from, right? Like behind the scenes is a CRM. They can track, all of your metrics and what you're doing, what you're not doing. You get the point, right? I don't know if you've ever worked in a business with a CRM, but just about every business has a CRM, right? Like I'm in real estate right now. I have a CRM to keep track of my clients. I was in car sales before. I had a CRM to keep track of my clients. Again, just about every business you have, they're going to have a CRM. So I don't see them going anywhere anytime soon. All right, so some key highlights from this presentation. Agentforce has handled over 1.5 million customer service requests at Salesforce. Pretty impressive. Currently, over 12,000 customers are actively building agents within Agentforce. But I'm not going to spend too much time on this. There are a few things I just want to highlight, and then feel free to take a screenshot if you want to look into this a little bit more detail. But let's see. The small and medium business marketing segment is experiencing significant acceleration with its recent monthly growth rates, 30 to 40%. Targeting approximately 20% overall growth. This is impressive, right? Like we want to see growth. So anytime I hear anything about growth, I get interested. Let's see, we have over 10 billion has been invested in organic R&D over the past 3 years, okay? This is good too. Organic, meaning these are things that are going to always bring clients, right? Like they're not going to pay for a marketing campaign, like let's say $5,000, that's going to make them $10,000. That campaign's done. It's not going to ever generate anything else. Let's talk about the next marketing campaign, right? Like no, organic growth, that's what you want. Let's see, operating margins have nearly doubled over the last 5 years. Wow. Amazing. And we'll get into that. Obviously, I'll show you the chart on that. Same thing, free cash flow, going to get into that. And then what was it? Oh, here it is. An additional 20 billion share buyback was announced last quarter. They pretty much, I've read something else that they said you can expect them to buy all those shares back within the next 6 months. It's going to add a lot of buying pressure. And this is arguably one of the most important things. And it's just because the markets are always forward thinking, right? Like a company could come out, and I'm sure you've seen this, right? A company comes out, they crush their earnings, their EPS, their revenue growth, all of it's great. Record revenues, right? Record everything. But they guide, right? Their guidance into the next quarter. They say, but we think things are going to slow down a little bit from there, right? Guess what? The stock price falls. It's just how it is. And I always find that interesting. But that's why when I read this, I was like, wow, this is awesome, right? Because this is looking way into the future. Salesforce is targeting over 60 billion in revenue growth by fiscal year 2030. Like, that's 60 billion, right? Like, that's pretty substantial. Representing a 10% organic compound annual growth rate. Wow, I mean, this is good stuff, right? In a nutshell, that is what Salesforce is, and some of their main customers are your biggest companies like Walmart, Amazon, American Express, US Bank, Toyota, Macy, T-Mobile, the list goes on. You get the idea. Again, that's Salesforce for you. That being said, first we're going to get started with the technicals as we always do. So let's jump right into those. All right, so I have Salesforce stock pulled up here. We are currently looking at the daily time frame just so you guys can get a bigger picture of the stock. You can see we had a double top here, which is a bearish pattern. And you can see once we broke that neckline, this thing fell off a cliff. And since then, we did have a bounce, as you always do. Usually a dead cat bounce is what I like to call it. And it kind of trickles out, right? It just goes lower and lower, 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 lower. So anyway, a lot of times when you see a big rapid drop, you'll get that dead cat bounce. But we've been chilling at this support right here, right? So I have this support line drawn. We do have a gap here that we did fill, so nothing to worry about there. But nonetheless, we're building a support here. Let's just zoom out a little bit further too. And again, as I mentioned, this company has been extremely bullish in the past, but it also has had big downfalls as well. I mean, we're looking at one right here. Now, granted, this was a time where the whole entire market was falling, but you can see that when it does decide to rally again, this thing takes off. So it does have some pretty big moves, but overall, extremely bullish company, right? So looking again at here, let's zoom into the 4-hour chart. Again, this is that support line that we've just been trading on, right? And I'm not gonna lie, this is pretty choppy, okay? Like you can see, right? Like we're falling, we bounce up, then we fall right back down, we bounce up, and it's just kind of going back and forth, trading in a channel, right? You can see that candle today, right, where that news came out, where we popped up, right? But what happened? It popped right back up to that resistance level right there, like literally, and then got rejected. And granted, the whole market has been kind of selling off today, and it's been choppy, and I feel it's going to be choppy until we get through the earnings to see, hey, do we have another leg up in us, or are we going lower? Based solely off the technicals, when we're looking at trade ideas, I think this is a good area where you could start a position and then have a stop loss under this major support right here, right? Now, this is the only thing I don't like about a swing trade on this stock, though, and that's, you see how volatile and like how wicky this is, right? Like the stock kind of like right today, like it wicked up and then almost gave it all back. And like you kind of wick down and then come back. And right here, like these wicks, right? I hate those wicks because they'll stop you out and then the stock will continue up, right? And so it's hard to have like a stop loss in the right spot, right? And so like what I would say is like I think you'd be safe that if we broke this support, then we're probably going to 210 or even lower. The only issue is, you have a good bit of downside there. Obviously, I do think the upside, I don't see a reason why we can't get back to all-time highs, but this is going to be like a long swing trade, right? Like maybe like a 6 to 12 month trade. That's not to say that this thing couldn't just rocket up after earnings or something like that, but you get what I'm saying, right? So for a trade idea on this one, based off of what we're looking at on solely the technicals, we have some support building here. This has been a previous support many of times. You buy at the support, you sell if we break it, right? The only issue here is that it's wicky, right? And it's a chance that you could get wicked down, stopped out, and then the stock could actually continue up, and you're right on your trade idea. But unfortunately, you took your loss, and yeah. So in my opinion, for this stock, I think it would be a better day trade off these support levels, right? Get in, set a tight stop loss. Like this is a good example, right? Like get in. You can see we kind of build a support here. You could have got in around here. Put your stop loss down here, right? Because if we go make another low, like we're going lower, right? Maybe not that much lower, but we're going lower. So for a swing trade and having a stop loss, like this is not super appealing to me, only because it's harder to manage your risk. That's the only reason why. But other than that, like you could day trade this thing, honestly, because I mean, look, like this is perfect for day trading, and these aren't massive moves, but you buy the dip on the support, you sell the rip. Buy the dip, sell the rip. Buy the dip, sell the rip. Buy the dip, sell the rip, right? I mean, if you just kept doing that, you're pretty golden. But this is what's going to happen, right? It's going to break up or down. And in my opinion, this could be a false breakout. It could be. I'm hoping, personally, it's not. But it could be. And you can see, though, we broke out, right? And now we're coming back down to test this moving average right here that we've been staying under, right? So if we can hold above here, right, then that could be a possibility of a trade. We hold above this level here, maybe put your stop loss below the moving averages. That's a possibility. Again, I'm just giving you guys the details, and then you make your own decision based off of your investing strategies. The main reason why I mentioned that, right, is because like when I first started trading, I was like, I'm going to be a day trader. And I realized real quick that that wasn't for me. Like it wasn't my style, right? And I've found that I'm more of like a swing trader. Like I like to buy high quality companies at decent valuations and then just kind of slowly build a position, swing it to a resistance level, take my profits, look for another setup. Like that's where I found my bread and butter, but you may be different, right? And everyone's different. And that's why I always like to give different scenarios when I'm going over, these trade ideas. Again, I mean, this is just not a pretty chart. I'm not going to lie. So in my opinion, again, this is not financial advice. This is a company I like for the long term. I'm buying and holding, and I'm swinging this for a longer term, like 6 to 12 months maybe, right? But nonetheless, like this is the one thing to keep in mind too, is that we had this huge rip, right? And this was all for really good news and some good guidance for the future. This just makes this an even better buying opportunity. Like, yes, we're up 4% today, but we were up like 8%, and now we pulled back to this, the moving averages. This could be a pretty good buying opportunity. But again, if you don't plan on being in this for a while, set a stop loss. Wherever you decide to put it, I gave you my opinions of where it is really hard to decide where you want to put it. But just consider your risk tolerance, and maybe what you do instead is you just do a max loss, right? Like, so if you hit a $500 loss, you just get out. The only hard part about that is that you have to be disciplined and take the loss. And from my experience, that's easier said than done. So, I'll tell you what I'm doing, guys. I bought a leap option for January 27. Just because it's an expensive stock. And in my opinion, I feel pretty confident that, by that time, the stock's going to be up. I mean, I'm up a little bit in the position now, but I plan on riding this thing probably back up to, depends. I'm looking at this level here. I'm looking at selling around this level. All right. And depending on how confident I feel, I might wait for this level. So I usually tend to, take profits around resistance levels. And then if I'm lucky, maybe the stock gets rejected, pulls back to, close to the levels that I was previously in, and I could take another swing trade, right? That's what I try to do. It doesn't always work that way, obviously. So these are the levels I'm going to look to sell and take profits. And simply because it's probably going to end up getting rejected at these levels. It doesn't have to by any means. But another reason why is because I'm in a leap option. Like these things lose value as time goes on. So time is on my side in the sense like this is a very long option. I mean, over a year long, right? But nonetheless, like I have to be a little bit more risk adverse on these than if I was just holding shares and I could just hold forever, right? So keep that in mind. Again, you do your own due diligence, make trades based off of what you feel, is a smart decision or not. All right, so moving on, let's take a look behind the curtains of Salesforce. And one reason why I love this platform that I'm using is because we can get projections into the future. Obviously, they're just projections and that could change, but nonetheless, it is valuable to see. And you can see that, the total revenue chart, beautiful. Definitely, this chart looks a lot different than the stock though, right? I mean, you can see revenues just consistently growing, but the stock price is actually declining. What's the question? Or what's the reason for that, right? Let's dig a little bit deeper. We're looking to the net income. This has been very choppy in the past, but it seems like ever since 2023 they had this under control. And although it is, although we have our ups and downs, it has a trend up though. So nothing to really complain about there. Obviously, we don't want to retrace too much though. We want to keep that trend going. Moving on to free cash flow. Again, another one that I can look into the future of. And looking into January 2028, I mean, look at that. So let's take a look at where we're at today, right? So we are at about 12 billion, right? And then it is projected to, that is nearly, like, what is that? 12 million to 17 million. I mean, that's like what, 60, 70%? The free cash flow is going to grow. Like, that's pretty substantial. That's, nonetheless, so, I'm not going to spend too much time on this. You get it. Free cash flow is growing. That's what we like to see. We love companies with lots of free cash flow and that are going to continue to grow that free cash flow. Taking a look at the total liabilities and assets or the balance sheet, looks pristine here. I mean, great. I mean, I'm not going to spend too much time on this. It looks really, really good. All right, so the next we're looking at the cash from operations. Okay, this is very choppy as well. Maybe explains the stock price a little bit, but you know, we have like these down quarters and then right back up. I mean, these are massive swings, but nonetheless, if we're taking like an average here, right? I mean, we're around like 19-20% average, right? Not too bad. And based off of previous, you know, data that we have here, like we're probably going to bounce here soon. All right, moving on, return on invested capital. So a good return on invested capital is like 5 to 7%. They are receiving about 7.6% right now. So on the higher side, and you can see the trend here, right? The trend is higher. That's what we want to see. All right, moving on to net profit margins, 18%. All right. Again, we've been negative before. We have this nice consolidation though, right? Like this base that has pretty much been formed here, where it just seems like we're just going to go higher from here, right? So again, nonetheless, like something we want to keep our eyes on, because if we break back down below here, I'd start to question like why, right? I mean, company's been around for a while now. They should start to, you know, mature a little bit and have things a little bit more under control. And, you know, this is a company that is projected to grow pretty substantially. And to do so, obviously, you're going to need higher profit margins. All right, so moving on, we have a few things going on here, and I just realized that this is kind of chopped off here, but nonetheless, you can see the idea or the picture that's being drawn here, right? So we have the price to free cash flow, the forward price to operating cash flow, and then the price to operating cash flow, right? So obviously, the price to free cash flow is showing how undervalued the company is. So the lower it is, the more undervalued it feels or looks, right? So with that being said, you know, based off of, you know, previous charting here, I mean, we are lower than we've ever been. So like based off of this sole metric and whether or not the stock is undervalued, like this has been the most undervalued the stock has pretty much ever been. All right, so moving on to one of my favorite metrics to look at, you know, just a simple way to see, hey, is a company over or undervalued? Well, you can see here, right? CRM has typically traded at a very, very high premium. And it's funny because, you know, the stock and the revenues and everything is just projected to keep growing. It's always traded at a high premium, and for whatever reason, it's just not the case anymore. The sentiment behind the stock is just, it's bad, and these typically are good buying opportunities for the most part. But again, this has been the cheapest that you've been able to buy this company for, pretty much, right? Looks like 19.9, 19.8, right? And we're right around there now. One thing I wanted to mention about the forward price earnings is that the overall market, right? Like the SPY and the QQQs, the NASDAQ, whatever you want to call it. The overall market typically trades at like a 20 to a 25. Maybe the NASDAQ trades a little bit higher, which this company would be in. And so we're trading at a 20 forward price to earnings. Like there just doesn't seem like there's much risk to the company at these evaluations. Now, obviously, they could come out with the next earnings report and it could disappoint. And if earnings go down, then, you know, that would send the PE ratio up. But based off of, you know, the investor presentation that they had, they seem pretty optimistic. All it takes is for investors to see the potential. And because the markets are forward thinking, right, then the forward price to earnings, like if it goes up even to 25 or 30, right, like that's pretty substantial growth just in the stock price. All right, let's take a look at some other projections real quick. Looking at the projections of the EPS projected to grow. Where are we at right now? 2005. So we're at 10.2, and it's expected to grow up to 14-ish. All right, so not too bad. Let's take a look at the price targets. Again, I do not solely trade off price targets by any means, but I do find them helpful. So you can see here we have a consensus rating of a buy. And then you can see we have 35 buy ratings, 8 outperform, which might as well be a buy rating, and then 11 holds, 2 no opinions, 1 underperform. That underperform is probably this one lousy price target at 221, which honestly we're not even that far away from. So I think you get what I'm saying. This is, again, not something to trade solely off of, but based off of a lot of analysts, right? I mean, over 40 analysts, they're pretty much saying buy the stock. We think the lowest this thing can go is, what's that, 220, and the high is 450, right? So let's just look at the average, 330, regardless of the way you look at it, there's nice upside. And again, the fact that there's so many analysts covering the stock, that's what gives me a little bit more conviction in it, right? Because I don't know, there's multiple opinions, right? And if 35 people are saying this is what they think the stock is going to do, that's, to me, that's helpful. Now, vice versa, let's say the stock had maybe 5 analysts, right? And there's 2 buy ratings or 3 buy ratings, right? Like, okay, well, the sample size is not as big. Just one more thing that I look at or consider before I, make an investment or a trade. But that's all I have for you guys in this one. As always, if you're still here, please consider subscribing to the channel and liking this video. And as always, if there's something specific that you want to see, just leave me a comment down below. I'll try to add it to my next video. For example, the price to free cash flow. I had someone recommend me add those charts to these videos when we're analyzing stocks, and I did. So again, I have a small channel and I'm trying to bring you guys as much value and knowledge as possible so you can make a better financial decision when it comes to investing in stocks. So again, I hope you enjoyed this content, and I'll see you guys in the next one.